Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking at something I looked at last week, which seems to be so important. And the fact that nobody on the YouTube that I've seen so far seems to be actually covering it, so they've all missed it, is something that we must pay attention to. I'm also going to have a look at where the Pi cycle and the RSI MTF lines are, which I've been showing you for the last many months, to ascertain exactly where they've moved to and where the price may come to in the next few weeks and months to show us the potential pullback that we might get at those points. And I'll go through the usual 60-day cycle and one chart that's actually showing us the short-term movements for the Bitcoin price. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, let's get cracking. But before we begin, the usual polite reminder, please always do your wider research before you make any investment decisions and your swing trade decisions. And before I get into the charts, I just want to make a quick announcement for tomorrow because I'll be posting a special video which will identify the Bitcoin tops for this coming cycle. It was part of the bonus video I did for the Bitcoin Miners Club on Friday, and that was to identify the Bitcoin tops and to see how that will affect the Bitcoin miners in their tops for this cycle in 2 more years' time. So if you hold any investments in the Bitcoin miners, then you'll be interested to know, and you really should join the Miners Club where we identify important issues that affect the Bitcoin miners. So for the price of a coffee per week, the information in those videos should more than pay for the monthly fee. So what is this 100% accurate chart that everyone is missing? Well, I showed you last week and it's basically powering ahead this week, and it's the weekly EMA ribbons. So if we have a look at the first halving, it gives us a clue as to what is currently happening. As I mentioned last week, whenever we've topped off and had a bear market and the price breaking down below the EMA ribbons here, whenever we recapture this before the halving, this red line here, once we've recaptured it, the price does not come back to that level where it's recapturing the EMA ribbons. And what's really important is that when we get above the EMA ribbons here, the timeline is important, and that is that the price went above the EMA ribbons from this point before the halving of around about 24 bars, about 5 months. So in the first halving, the price went above the ribbons 5 months before the halving. And as you can see, the price never came back below this price ever again. And in the second halving, this happened one more time. When the price had reached the top here, the price fell below the EMA ribbons. But once we got out of it here, at this candle, that was the time that this price isn't going to come back. And this breakout from the EMA ribbons was exactly 37 bars, and that's 6 months. So the first breakout was 5 months before the halving, and the second halving, the price broke out above the EMA ribbons 6 months before. And in the last cycle, i.e. the last halving that we got in May 2020, exactly the same thing happened. We topped out at 20,000, went below the EMA ribbons, and when we came out, this should have been really the breakout, but obviously we had this COVID situation where we fell back again one more time here. But you can see once we broke back above the EMA ribbons, and that was before the halving, we never came back below that price ever again. And this happened just 2 weeks before the halving. So where are we now? Well, exactly the same pattern over and over again. This is not based on what I think will happen. This is exactly what's happened in the charts since 2012. So we topped out here at 69, fell below the EMA ribbons, and we've been messing around with them. Now finally, 2 weeks ago, as I mentioned last week, we've now finally got above the ribbons at the price of about 28,000. And this has happened exactly 7 months before the halving. So the probability is that it's not going to fall below this level here at 28,000. And this is a real warning to the bears, because many of the videos that I've been watching, there are many channels which are just permanently bearish channels, and they're forever waiting for this price and this price and this price, and even much lower levels. Some are still predicting 7,000 for some reason. And obviously with Bitcoin, everything is on the table. The possibility is even going down to the zero. But the way we have to assess it and weigh it up is, what is the probability? And the probability of going below even this level, I would say 25,000, is no more than about 15 to 20%. But you can see last week, after we did the video, the week finished with a big Marubozu candle to the upside. And so far this week, we've managed to get slightly above last week's close. Maybe in the coming weeks, we'll get a pullback to this level here, around about the $32,000 mark. But we'll have a look at later on where in the shorter term, in the next few weeks and months, where this price seems to be heading to these levels. So very important, these EMA ribbons are telling us in the charts, based on the historical narrative and the historical price action that we've had, that with a very high degree of probability, we're not going to go below the top of these EMA ribbons, which is at 28,000. And as you can see, these ribbons, since we broke out, are now beginning to move to the upside. So they're already pointing in the upward direction. So the chances are, if we can make a move to the next level, around 40,000, when this comes down, these ribbons will probably give support to the Bitcoin price anywhere around the 32,000. So I would request people not to ignore these EMA ribbons, even put them on the charts and keep checking them. Okay, so let's have a look at the targets that we've been looking at for the last 8 or 9 months now. Based on the two indicators, that's the Pi cycle and the RSI MTF. We can see now with both of these indicators, we were hoping that they would be about the same price. So what they're now posing is a little bit of a problem, which we may be able to solve by looking at the charts back in 2019. So currently what we've got is the yellow line here, which is the RSI MTF. That's the RSI smoothed over a multiple time frame. And this is showing one of the targets that we've had here now for 10 months since the end of last year. And that target is here at around about the 40,000 mark. And the Pi cycle is showing us the actual second target that we've got, which was around about the 50,000 and is currently at 51.5. So how do we solve this conundrum now of where the price could easily come up to? Is it going to get rejected at the 50? Is it going to get rejected at the first one at the RSI at 40,000? Or will it go straight through to the Pi cycle at 50.51? So if we put our emotions to the side and just look at what's happened in the past, it may give us a clue as to what may happen. So this is the chart for 2019, when the yellow line, the RSI, came down and was lower than the Pi cycle at this point, just as it is currently, as I've just shown you. So this conundrum has happened before in the last cycle. So this is what happened. As we came up to the RSI line, as expected, it actually got rejected, and we found around about a 17% pullback at exactly that point. And after the pullback, the price went all the way up to the Pi cycle line and even went above it here. And at that point, you can see the yellow line shot up to meet the actual Pi cycle. So both lines were actually converging at this level after this pullback. And then of course we got the actual pullback from these lines here, and that was around about a 22% pullback. So these two lines proved very relevant in terms of the resistance that the Bitcoin price found in 2019. And this may well be the type of scenario that we're going to face currently. So the way the market is being set up, it may well be that we come up, as the price rises, as you can see, the yellow line is coming down. So by the time it gets up to these levels, the yellow line is going to be coming down a little bit lower to around about 40,000 from its current 41. So a rejection around this point will give us a little bit of a pullback. And if it follows the same fractal pattern as the 2019 chart pattern, then we would be probably coming back up here. So as this price comes down, the RSI will come down. And as the price then moves up from here, this then moves up to this level. So it's still going to be around about the 50,000. And this yellow line, the RSI, will then probably shoot up as well to meet the Pi cycle at around the 50. So what we're probably looking at is two pullbacks, one at the 40 still and one at the 50. So just based on what's happened historically, it looks like that this is going to be the major pullback here. So there'll be a minor pullback at this point, but a major pullback here into the halving. And only time will tell, but it's something we need to be really aware of. If we have a look at the 60-day cycle, we can see that this narrative I've just painted for you may well play out according to how the cycles are setting up at the moment. So we're coming into the midpoint of this cycle that started here on day 51 of the previous cycle. And that was around 12th of October. And it should be finishing around about the 11th of December. And the midpoint here is at 11th of November. So if we're going to create a right translated cycle, we could quite easily get a little pullback into the mid-cycle, anywhere back to this point here, around the 32,000, and then go on a right translated high over here, and that could take us all the way up to the 40,000 you see here, and then into the 60-day cycle end, which would then hit this green line, which has been a support and resistance along the way. And that would be at around about the 37,000. So this is how it can possibly play out, that we may well have a little bit of a pullback, although the way this is setting up, it looks like it wants to go higher rather than come back into this mid-cycle low here. But it is set up to make a right translated cycle anywhere around here in this region, and then a pullback into the 60-day cycle low for the new cycle to start and make the next high towards that $50,000 mark here. And if we put on the 8 EMA, we can see that the 8 EMA is holding very strong. So the price is finding support all along this 8 EMA. And if we have a look at the weekly chart, you can see that this neckline at 31,000, which was the actual resistance for this range of 25 and 31, this is looking like an amazing little break up here. And it's now consolidating at the higher level, the higher third of this big Marubozu candle. So that would suggest that there is a move to the upside coming up very shortly. And on the monthly chart, it's looking amazingly bullish, having broken above this 32,000. We've now come to the price levels of 1.5 years ago. So 18 months later, we've now finally reaching those price levels here. And it looks like it's setting up for a move to the upside. So on the larger time frames, the price for Bitcoin is looking quite bullish. And the candlestick patterns seem to be working wonders on the dollar chart. As I mentioned last few weeks, we got this gravestone doji candle here, which would mark the top of this trend. When you get one of these gravestone doji candles at the top of a trend, very high probability, more than 80%, this is going to have a pullback to the downside. And look at what this candle did yesterday. We have an outside bar engulfing bearish candle. So we've had a gravestone doji candle followed by a bearish outside bar engulfing candle here. So the pressure to the downside for the dollar is very, very high. And of course, with the risk on assets like Bitcoin, this is going to have an inverse relationship. So as this comes down, the Bitcoin price should then start going up just like the rest of the wider markets. Which brings me to this particular article which came out a few days ago, and what it's really saying is that the holding record of 90% of Bitcoin supply hasn't moved in the last 3 months. And if we scroll down, we'll see this particular chart here. And if we have a closer look at this, so what it's saying is that 89% of the Bitcoin supply hasn't moved in the last 3 months, which means that the long-term holders are increasing, which means the supply is falling. So when the ETFs are announced, you can see the impact it's going to have on the Bitcoin price. And that again fits into the narrative that we may be well going into the next few weeks and months towards a price of around about the 50,000. At the moment, the charts seem to be painting the narrative that all roads for Bitcoin seem to be going in one direction, and that is to our target of 40,000, which we've had for the last 10 months. And 50,000. So these are the two targets really to look out for. I know that many of you follow the Bitcoin miners trade on the Bitcoin miners club that we have here. This is currently the position that we have. We started these swing trades with the Bitcoin miners on the 18th of October. And the current state of affairs is that we went into 3 trades here. We actually met the first targets for miner A and miner C. When we did that, we moved the stop loss a little bit higher. And that higher stop loss actually stopped us out. So we've now got out of 2 of those trades, but we've still got one miner B, still live. And currently at the Friday's close, that miner is up 57% from our entry price on 18th of October. And that's still got around about another 30% to go as far as I can see from the charts. Obviously, this is not financial advice, and only time will tell if we meet that. But so far, so even though we met the targets, I continued with the trade without taking any profits. But when we got stopped out, I got out at 7.5% profit on the first trade, but a 5% loss on the other trade. So just above break even on that one, with one of them at 57%. And I've actually taken 50% profit on that particular miner. And I'm going to run the rest of the 50% to the next target that we have. So if you're interested in these Bitcoin miners in terms of swing trades, undervalued Bitcoin miners, and if that's the kind of thing that interests you, then you can obviously join us at the Bitcoin Miners Club, where we do a video every Wednesday and we do the bonus videos as and when required. And as I mentioned at the beginning of the video, you can join us for the price of a coffee per week at $12.99. There's no obligation, there's no contract, you can cancel at any time. And in this week's video, I will be returning back to the top of the miners cycle in the next 2 years as well, just to carry on from the last video. Okay, we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.